Hi, I'm Zach Scheit with the Rich Retirement Letter, and today I want to give you three stock picks that should do well this fall as one specific area of the market trades higher. Now, it's an area that you're probably already familiar with if you've been following our research, and hopefully you've already locked in some great gains from this family of stocks this year. Now, before we get to our picks today, I want to take a quick look at what's going on behind the scenes. Now, over the weekend, we started hearing more speculation that the Fed may be a lot closer to hiking interest rates than previously expected. Last week, we saw more signs of inflation picking up, with wholesale prices that companies have to pay spiking. Now, this has led some Fed members to start calling for the Fed to slow or taper its purchase of Treasury bonds and mortgage security. This is largely seen as the first step towards raising interest rates because these bond purchasing programs naturally drive long-term interest rates lower. So if the Fed tapers its purchase of these bonds, it should help market interest rates to rise even before the Fed officially raises its target rate for banks. While higher interest rates may be challenging for tech stocks and some other areas of the market, it's great news for financial stocks. Now that's primarily because when interest rates rise, banks can make bigger profits from their traditional business of lending to individuals and to businesses. So the prospect of higher interest rates is actually sending some financial stocks towards new highs. As you can see in this weekly chart of the financial sector, financial stocks broke out of a multi-year consolidation in the first quarter of this year. Now this was a big deal because it was the first true breakout since financial stocks sold off during the financial crisis in 2008. So it's taken more than a decade for this group to rebound and finally start hitting new highs. We talked about this group earlier in the year when it first broke out and recommended some bank stocks that did quite well as the financial sector shot higher. Now, looking a little more closely at a daily chart of the financial sector, you can see that stocks in this group took a pause during most of the summer before once again breaking to new highs. This new breakout gives us another great chance to take some new positions in financial stocks. The break higher should catch more investors' attention, which can lead to another round of investment cash pouring into stocks in this group. We're going to be taking a quick look at three financial plays that you can invest in today that have plenty of room to run higher as financial stocks rally. Our first play is Berkshire Hathaway, and we'll be looking at the B shares, which trade near $288. Now that's a bit more reasonable than the A shares, which are currently priced around $434,000. Berkshire is an insurance company at heart, but has become more of an investment company that Warren Buffett has used to profit from his best stock ideas. So in some ways, a position in BRK gives you exposure to some of the best value stocks in the world right now. Now, as interest rates rise, Buffett's investments should do very well. Many of the positions held by BRK are financial stocks like Bank of America, American Express, US Bancorp, and Berkshire also has some big positions in materials stocks that should benefit from inflation. The stock has had a very similar pattern to the overall financial sector, and as institutional investors start recommending more stocks to their clients in this area, BRK will be one of the primary names on this list. Our second stock has a bit of controversy surrounding it, but that could actually work in our favor. You see, Wells Fargo, ticker WFC, has had its share of scandals over the years. Most notably, the bank got in trouble when its employees actually opened bogus accounts for customers in order to meet sales quotas. That's definitely a stain on the company's reputation. But as WFC cleans up its act and starts putting that part of its history in the rearview mirror, shares could accelerate higher as investors get more confidence. The stock still hasn't made a new all-time high, which means there's still some overhang from these past transgressions, but shares are now trending in the right direction and WFC is growing profits as the economy reopens. Higher interest rates will help WFC's traditional banking business, and this new breakout gives us a chance to buy as momentum starts to pick up. Of course, there will still be some back and forth as the company works to improve its overall reputation, but I expect this bank stock to give us some nice gains over time. Our last financial stock pick for today is Blackrock, ticker BLK. Now, the company manages investments for some of the biggest pensions and endowments, and BLK is in charge of more than $9 trillion in assets. It gets paid fees, pretty lucrative fees, to manage all of these investments. As the stock market continues to move steadily higher, BLK should see its fees increase. Meanwhile, a shift in interest rates makes it even more important for clients like endowments to use an institutional company like BLK to manage their risk. Now, the stock could also benefit from individual investors pouring more money into the market. You see, BlackRock's iShares are some of the most well-known ETFs, and as more investors use these tools to grow their own wealth, BLK's profits should accumulate. Now, shares have been moving steadily higher, but even with these higher prices, BLK is still just trading at about 21 times next year's expected earnings. That's a pretty reasonable price for a company that is steadily growing earnings and part of a big group that's quickly becoming a favorite on Wall Street. So there you have it, 3 plays to profit from the secondary breakout in financial stocks. I'd love to hear what you think about these names or any of the other stocks that we've highlighted here at the Rich Retirement Letter. So please send me an email at richretirementfeedback@stpaulresearch.com or just leave a comment on this video. Here's to living a rich retirement.